So, dun, 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 dun. Alright, are we streaming? Are we live? Alright, thank you guys so much for joining. Today is November 12th, 2024. And, yeah, let's get right into the stream here. So, today I do not have a daily bias here. So we did retrace back into this daily fair value gap yesterday. One thing that I do want to pay attention to is that we do have SMT here at the daily fair value gap with ES. So let's get this there. Alright, so there's an SMT here now. ES has taken out previous day low. However, on NQ, we have failed to take out previous day lows. So there's an SMT here at the lows. Something that you want to watch out for. Coming into this morning, I would have liked to see how this 8-hour and 4-hour candle closes before I really pick a side. But if we do end up deciding to retrace back inside this daily fair value gap, it's completely fine. But on the bigger picture here, on the higher time frame perspective, I want to see us hold this daily fair value gap, and I want to see us expand away from it. And when can we expand away from it? Well, you would want to take a look at the economic calendar for when we are going to complete this objective, right? Or can expand higher. So we have CPI and PPI on Wednesday and Thursday, so that is when we could expand higher. For right now, we could consolidate because the economic calendar isn't telling us that we are going to expand that, and that's something I do want to note. So what can I'm gonna put that in my expansion model actually, because that's something that is pretty yeah, that's just something that you would really want to keep in mind. So on the daily / weekly, on the daily / weekly expansions, check the economic calendar for when we should make a large move. If no ref folder, expect the consolidative. On the daily and weekly expansions, check the economic calendar for when we should complete check the economic calendar for when we should complete the higher time frame objective. If no red folder, expect it to be consolidated day. So what I mean by that is we should take out November's, we should take out Monday's high of day. I don't believe Monday created that. I am anticipating a open, right, low, high, close. I'm not anticipating for Monday to be the low, or I'm sorry, I'm not anticipating for Monday's high to be the high of the week. I'm anticipating for maybe Tuesday or Wednesday to set the low of the week. Yeah. But as of right now, in this present moment right now, right? For intra-session objectives, I do want to pay attention to how the 4-hour and 8-hour closes as of right now. We have about 12 minutes left to see how we close here on the 8-hour and the 4-hour. Depending on how we close there will tell me if we are going to expand higher or will we retrace back inside this daily fair value gap. So if we mark up premium and discount here, we are, I'll actually just leave this here, this on for right now, but yeah, so we are kind of in a range right now. Like I said, we should, I'm not really anticipating a large range move because the economic calendar isn't telling us that we're going to continue higher or lower right now. We don't have any red folder news on Tuesday. However, CPI is on Wednesday, so we could anticipate some sort of expansive move on Wednesday. So us consolidating here makes complete sense. It's just not the right time for us to expand, which is why time and price. It's always time and then price. And that's just like one way that you can incorporate time into your style. And that's just my understanding of time and price, right? A lot of people just use price. That's my interpretation, and that's what my understanding of time and price means. ICT never really, it's kind of, he states it very vaguely, so this is how I interpret it. But yeah. Oh yeah, one thing I failed to mention here is if we're anticipating an open, low, high, close candle, right? What can we like keep, or how do I word this? What is some key takeaways if we are anticipating this next weekly candle to be an open, low, high, close? Well, this right here, I'll make that a red line, but that right there is a weekly open, right? You want to form majority of your trades below the weekly open. So let me mark that out as weekly open. So you will always want to be, if you're anticipating the very next candle to be a up close candle, right, which is this right here, that means you would want to be a buyer below the weekly opens, which in this case I'm buying below the weekly open, and vice versa. If you want to flip this for selling, if you're anticipating a open high low close candle, that means you would want to be a seller above the opening price. So during CPI, if we can get some sort of entry model that allows me to buy below the weekly open, I'm going to take that. That's going to be an A+ model, if you know, it meets the requirements. But that's just all I have for right now. Yeah, that's just something that you just want to keep in mind too. So the candle, this up close candle would look something like this. Would look something like, so that would be, it would look something like that. So you want to be a buyer, like I said, you want to be a buyer below the weekly open if you're anticipating an open low high close candle. And you can apply this to every single time frame. You can apply this to daily model, to the 4-hour model, to the 15-minute model. It's just whenever you go onto the like sub 15-minute models, like 10-minute models, 5-minute models, you would have to go on to like the 1 second chart or maybe like 15-second chart to find your entry pattern, because you have to line your, there has to be proportionate here in your entry model. I'm sorry, to your trade model and your entry pattern. If you're trading like a monthly power of 3, right? If you're anticipating, let's just say this monthly candle here were to close right now, right? If this monthly candle were to close right now, and I can anticipate for this monthly high to be taken, right? Would I go onto the 1 minute time frame to find a entry pattern to target this monthly high? No, I would go onto a lower time frame relative to that monthly, to the monthly candle, right? So you can go from monthly to maybe weekly. That makes sense. And let's just say you're taking a weekly model. If you go from a weekly model, you would want to go to a daily entry pattern. And like I said, this fractality applies to every single time frame. So just keep that in mind. See how there's no displacement in either side of the market here? We're neither going up here or we're going down. There's no displacement to the upside or downside, which is kind of just very, very interesting. Something that you don't want to be a part of is consolidative, you don't want to be a part of consolidation. You want to be in where it's like really expanding in one direction. We're about to close here, like I said, on the 8-hour candle and the 4-hour candle in about 5 minutes or so. So based on the 8-hour and the 4-hour, I can anticipate for the highs to be taken. But on the lower time frames, I have to find an entry model to target and align myself with the higher time frame order flow. And once I get a 15-minute model, I would go on to the sub 5 minute for an entry pattern. Very interesting. Am I willing to take this model here? Probably not. I'll probably just let this one go. And I'm gonna go over the pros and cons here with you guys. right, there's the 4 o'clock close. I said 4 o'clock. The 4-hour candle closure there at 10 o'clock. So, like I said before, based on how we close here on this 4-hour and this 8-hour, I can anticipate for the 4-hour and 8-hour high to be taken. And it is also in alignment with the 15-minute, the 30-minute, and the hourly high. So, my morning objective here would be this high right here. Would be 21,252.25. That would be my morning objective, is for us to take out that high. After we take out the high, I mean, I really don't care where we go. I don't really have a bias here. But like I said, that would be my morning objective. Here, here's where we opened. And like I said, I wouldn't take this because we're consolidating. We're not, I don't believe we're not in discount of this dealing range. There's really no need for me to really force anything. But I do want to get the 10 o'clock opening price though, because that is essentially the 4-hour open. And what did I tell you guys about the opening price? It's fractal. You can buy below and sell above, whichever model that prices is suggesting. But like I said, 15-minute, the 4-hour high and the 8-hour high would be my morning objective right now. So I wouldn't take this model here to target this. I wouldn't take this model here right now because, like I said, we're lacking displacement, and we're not in discount of this higher time frame dealing range. It's not in discount. We're basically in premium, or we actually are in premium. There's no like vagueness to it in my words. That we are in premium. But yeah. Going back to the pros and cons here. So some of the positives from previous week was being able to stay patient and disciplined and waiting for my model to present itself. If there's no model, then I'm just going to stay on the sidelines. There's no reason for me to force anything, and there's no need for me to force a viewpoint onto the markets, because that's just not how the markets operate. You wishing something to happen isn't going to happen because you simply wished for it. And that is very, very true when you're trading. You can't force anything onto the markets. The markets will tell you when you should enter and when you should not. It should tell you where you should place your stop loss and where you should place your targets. Yeah, that's just something that you just have to submit to. Staying disciplined to the model, and understanding when low probability market conditions is something that I've been working on. So staying disciplined. Second positive here is, even like I said here, right? Even when I know, or like even when I can anticipate where prices wants to go, right? If there's no entry pattern in my model, then I'm not going to take it. No matter how good it looks, I will not take that trade if there's no entry pattern for the model I'm going to be taking. Yeah, third thing here is you have to understand what prices want to do at the present moment. Even though I can anticipate for higher prices, right? If I take a long right now just because of the thought that, hey, we're going to continue higher, where is my stop loss going to be? Where am I going to enter? Am I going to enter just with the idea that we're going to continue higher? Nothing's guaranteed, which is why you need a model. You need some sort of risk parameters here. And that's essentially what a model is. It gives you a concrete stop loss and a concrete objective. So, like I said, the current objective here for prices is to take out 4-hour and 8-hour high. Even though that it suggests higher prices, would I be, only taking profits once it hits new all-time highs again? No, no. That isn't what the model's giving me currently. That might be the higher time frame perspective model, but the lower time frame model isn't suggesting that specific move at that time. And like I said, going back to time, when should we take out Monday's high of day? I'm anticipating either Tuesday or Wednesday with PPI or CPI. And some of the negatives here is going back, requiring there to be a higher time frame objective. There are 4 reasons why prices moves, right? To rebalance inefficiencies, which is basically us trading back into a fair value gap. The second thing is to retrace into discount and premium. Third and fourth is to generate and take liquidity. I created a model for the EQ model, which is basically us retracing back into discount and premium. The expansion model is basically us taking out liquidity, and the rebalance model is us rebalancing a fair value gap. And no matter how good a trade looks, if it does not have a higher time frame objective, I'm not going to take it. So like here, if I'm going to take this model here on the 15-minute time frame, there's no higher time frame objective, right? The 15-minute is already suggesting higher prices. It's the same high as the 4-hour high. So that means I can't use the expansion model. What about the discount, or what about the EQ model? We're already in premium, so there's no reason for me to long into a deeper premium. That makes no sense. And what about rebalancing? We already rebalanced this 4-hour fair value gap, so there's no reason for us to be taking that model anymore. So all 3 criteria here did not get checked, so I'm not going to take that. Improvements here, being more selective, like I said, requiring a higher time frame objective is something that I'm going to continue to push forward with. And second thing, some improvements, just being aggressive. And third, continue to practice patience and being really focused and honed into whatever I'm doing at that current moment, whether that be trading, whether that be going to the gym. If I'm going to the gym, I'm going to the gym. There's no reason for me to be doing anything else besides that, or anything that I do. And now, so it looks like we are trading a little bit lower here. If we do end up taking out the 4-hour low, then so be it. But let's see if we are in discount here yet. So no, we are not. I just want to give me. So we did trade up into. Did we trade up into this 4-hour fair value gap? No, but we did end up trading into this 6-hour fair value gap though. Okay, that's just something that I want to keep in mind. For right now, at least, I would pay attention to this dealing range from this swing low to this swing high. Notice where the equilibrium is at. So, we've yet to retrace back into equilibrium, so that's something that you do want to keep in mind right now. So equilibrium is at that 0.5 level. So if we are going to be bearish, right, we could take out this 15-minute low, and how low could we continue? That 0.5 level, that discount level. That's basically what a higher time frame objective is. Higher time frame is suggesting lower prices, and the 15-minute model is already suggesting lower prices too. And that's gonna wrap it up for the pros and cons and the improvements. I have to do a quote of the day. There is this quote from a book I was reading last night called Maximum Achievement, and it goes like, let's see, 11/12/2024. How big would you dream if you know you cannot fail? And that is by Maximum Achievement. Well, it's not by Maximum Achievement, but it's written in Maximum Achievement. The dude's name is Brian Tracy. How big would you dream if you know you cannot fail? Interesting. 3 minutes left on this 15-minute candle. So we went lower, we're continuing higher. Morning objective is still the 4-hour and 8-hour high. That is my morning objective. Anything else would be for a later time. But currently my objective here is the 4-hour and 8-hour high. So let's just say this 15-minute candle closes right now, and it closes in a very bullish, very bullishly. I would anticipate for that 15-minute candle's high to be taken, right? How high can we go after that? This would be considered an expansion model, right? How high can we go after that? Well, we could end up taking out the hourly high, the 30-minute high. I'm sorry, this is the 4-hour high, this is the hourly high, and this is the 30-minute high. So this would be considered an expansion model for us to continue higher to attack these highs here. That is an expansion model. Let's take a look here on the 3-minute time frame. So we disrespected a 3-minute fair value gap. We closed above it on the 3-minute time frame. So here now, if I'm given an opportunity, I would take an entry at the 3-minute fair value gap. Right? Yep, 3-minute fair value gap. And I'm going, well, let's just see how we create this first, but I'll take an entry here, target the 15-minute high, and then I would leave, some positions left to target the 4-hour high and the hourly high. Doom doom doo doo doom doo 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 doom doom doo 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 doom. Not something that I want to. Isn't something that I wanted to see here, because now we aren't suggesting higher prices. So, yeah, I don't know. Very interesting. Very, very interesting. 30 seconds left. I doubt we're going to. I don't know. Actually, we'll see. 20 seconds left. So I've done that. All right. I want to take this model. I want to take this model. I'm just going to I like to just sit on the sidelines. How long have I been streaming here for now? 30 minutes. Not as long as I would have wanted to stream for, but I could go over the EQ model with you guys, but I'm planning to make a video over it, so I don't want to release it I don't want to release it just yet. But yeah, that's probably, yeah, I'm just gonna wrap it up here. Thank you guys so much for watching. Like I said, my morning objective would be the 4-hour and 8-hour high. If we can get any, any setups that allow higher prices, and we've yet to complete that 4-hour high yet, then I would consider that long. If not, simply just gonna wait for tomorrow and